Welcome to this week's market drama. We'll start with S&P 500, which was down slightly more than 1% for the week. It is up close to 15% year to date. When you look at what economic data came out that could have driven the markets to sell off, you could point to payrolls data, right? U.S. payroll came in weaker than expected at 209 versus a 240,000 that was expected. And there were some material downward revisions to job growth in April and in May. U4, though, right, the unemployment rate dropped from 3.7 to 3.6. That still shows a lot of tightness in the job market, even though payroll growth has not been as strong. And then when you look at wages, I think this is where the market focused the most. US wages came in at 4.4% year over year growth, which is higher than the 4.2% expected. The markets, I think, are focused on if the job market holds up the way that it has and wages are not coming down significantly, it's going to be hard to bring down inflation, especially services inflation, which has been the stickier one. So I think investors now are expecting the Fed to raise interest rates in July, bringing the Fed funds rate to 5.25 to 5.5, and they might keep them there until May 2024, right? At least that's what they're kind of communicating via the dots that they give us for forecasts for future quarters, future months. When it comes to this week, we have a lot of inflation data coming up. The main ones to keep an eye on are CPI, Consumer Price Index. Core CPI is expected to come in at 5% after being 5.3% last month. And then we also have Producer Price Index report for June. Both of these will be great indicators for the market to keep an eye on to see if the story changes when it comes to the Fed interest rate trajectory in the months to come. All right, stay tuned for next week. Have a good one.